Hey folks, Dan Frio here with your closing bell for June 13th, 2025. So I figured I would do this live today because I'm condensed with time a little bit today, but I've been working on these all day for you guys. Why did interest rates go up? So that's what we want to talk about or focus in on today. And the reason why I'm saying that is normally in a normal market when I see this news coming out. So the first thing I saw last night was some of this information coming through, and then this morning I'm like, okay, we really have to dive into this. Because normally, here's what happens with the stock market, with hard assets like gold and things like that, and also the bond markets. I want you guys to understand kind of the dynamics of what's going on behind the scenes. So usually when we see events like this, wars and major events that just disrupt the entire system, disrupt the entire world, what you normally see is have investors move out of the stock market, and that's why you're seeing the stock market doing this. It's almost down 800 points. So what happens is people pull their money out of equities that you're seeing right through here, and they move them over to normally bonds. But the bond market right now is in chaos because we have the tariff thing coming. We have the great big tax bill or whatever the hell that thing's called. We have all these uncertainties. What's the Fed going to do? And there's just, it's a mess. So I wanted to get back with you guys to explain to you kind of what's happening. And I dove into it, and the biggest culprit right now is right through here. Look at oil. Oil is up 8% today, driving the prices up to $73 a barrel. So now this is telling us inflation, the piece of the inflation was coming out of the equation because of oil is now way back in play plus more. So I did a deep dive into this, and I did some research, and I just want to explain to you kind of here's what the bond market's looking like. Now this is a one-day chart. So this is what we saw today. So the opening bell I kind of saw all the way down through here, and this is about when I posted this morning, and it continued to deteriorate down about 30 ticks, and it's recovering a little bit, and I think the markets are just at this point, they're closed today for the rest of the day. So we're going to pick up on this and watch it over the weekend to see how this resolves. So if it's a quick conflict like we see in some events like Desert Storm, this might just blow over and next week come to a little bit normalcy. But if this continues, we might have some major issues, and let's get to the reasons why behind it. So I want to share with you guys a breakdown that I did on the whys behind what's going on right now with all this. So let's get over to it. And I break it down like this just so you can just see it on the board. You can even pause it if you want. But the reason why I put this in here is this. Why is the U.S. bond prices down despite global tensions? And again, normally when we see this happen, people dump stocks and move into bonds. So let's go and figure this out. U.S. bonds typically rise during geopolitical unrest as investors seek safe havens. And that's what I thought was going to happen. However, in June of 2025, despite the tensions between Israel and Iran, bond prices are falling, meaning rates are going up, and here's what's happening. Inflation and oil. So it's going to break it down to just right through here, and I'll break it down briefly for you. It's not going to be a long report because here's the news. Okay, inflation. Middle East tensions have pushed oil prices up significantly. We saw that they went up 8% just today alone. Rising inflation fears. Higher inflation reduces the appeal of fixed assets like bonds since they offer a mixed return. All right, so here's what's happening, why people aren't investing in the bond market right now. With the key Fed meeting approaching, and it's coming up next week, I'm going to show you that here in a second, investors are uncertain about the future interest rate cuts. If rates stay higher for longer, existing bond prices will lose value, so many investors are just staying on the sidelines. So what a lot of investors are doing like right now, they're like, we don't know what the Treasury is going to do. We don't know what the Fed's going to do. So we're just going to either buy gold or we're just going to sit on the sidelines because even if we buy bonds, we might take a loss. So confidence in U.S. debt, there's still confidence. There's still growing concerns about globally about the long-term U.S. fiscal policy. As a result, some capital is flowing into gold and the U.S. dollar rather than treasuries. So you're seeing the dollar rally today as well as gold prices, and I just validated that. I'll show you these charts here in a second. No broad escalation yet, but I think it's just those turned around. This data was from earlier, so I want to just show you it looks like Iran is now retaliating, and this thing just might get completely out of control. So we'll focus in on this. But here's basically the summary. Oil prices surge, pushing up fear of higher inflation. So what is the Fed going to do? Fed cut expectations has weakened because they're like, okay, now we have this uncertainty. We have oil prices and energy prices rising, and now we're supposed to maybe, well, they weren't going to cut rates next week, but maybe they'll come in at least least give us a green light or a yellow light that maybe there's some light at the end of the tunnel for interest rates. But right now, if you have this tension or the war in the Middle East adding to the pressures of everything else, and you have oil prices skyrocketing, increasing the odds of more inflation, plus the tariffs, plus the big beautiful tax bill, Federal Reserve's on hold, and the markets are just saying, what is going on? So, and we have no clarity on it. Think of the clarity that we have on tariffs. Don't have any yet. On the big beautiful tax bill, don't have any clarity yet. What's going on with the war here? Don't have any clarity on that. So it is completely just the Federal Reserve's in the dark, and I think investors are as well. So that's what we're seeing right through here. If the situation escalates or inflation data softens, bonds might rally back. On the flip side of this, if it escalates and oil prices even continue to deteriorate, and then the Fed comes in saying, we're going to be on pause as long as we possibly can, you're going to see a pretty bad market, and you're going to see interest rates jumping from here. So let's get over and recap the market that we're seeing right now. Mortgage rates didn't jump as much as I expected with the bond market rally, but I expected this really to go upward today. I mean, I'll put it this way. I thought mortgage rates would come down this morning when I heard the news of the bombing and the retaliation, but I never thought about the oil prices, and we talked about it briefly this morning, but oil prices continue to ratchet up, causing concerns for more uncertainty in the inflation markets. So that's what we're seeing right through there. The stock market over through here, let's take a look at it. Yahoo Finance, this is all over the news right now, and then you have all the other things. Here it is. Oil prices could top $90 as Iran conflict goes up. So this is how bad the markets are looking, and we hit oil prices at $78, $79 a barrel. How bad is this going to be if oil hits $90, maybe $100 a barrel? So this needs to be squashed pretty quick. Otherwise, there's going to be a lot of uncertainty, and it's not going to help the Federal Reserve's decisions as well. So if we go over to the bond market with this, the good news, or I guess the silver lining behind a lot of these things, we are still better off than we were at the beginning of the week. So again, as these prices go up, rates come down. Okay, so here's the week in a nutshell. We started down here with a bond yield at 98.61. We're at 99.04. I thought we were going to tick up to the 99.5, maybe the 100 level where we were just a couple months ago. You're also seeing right through here the bond market, the 10-year Treasury. Look at this move. This is crazy. But this is also a 5-day chart where Treasuries are still lower than where we started the week. We started the Treasury week at a yield at 4.51. We're at 4.4 right now, so it's still an eighth of the percent lower. So at least it's not catastrophic, but the news can continue to get worse, and I'll keep you updated on that. We go back to the stock market, and let's look and see if people are moving their money into crypto. Not moving their money into there as well. Let's look at gold. Gold's up another 1.5% today. Silver's up as well, and we have oil just skyrocketing as well. People, they're not really buying bonds because they don't know what bonds are going to do. So everybody's sitting on the sideline buying gold and any other hard assets they can, and they're also staying away from the cryptocurrency markets that is volatile as all get out as well. So that's what we're seeing through there. Now next week, here's what we're going to get. There's not much news coming out because we got most of it this week. Over the last 2 or 3 weeks, we had fantastic news on inflation. We had the PCE, the number one factor that the Federal Reserve monitors. It's been coming down and down and down. We had the CPI and the PPI both come in. They're both in line or under what it was expectations. But this oil trade could make a big difference when it comes to all that. So next week, the economic calendar looks like this. Tuesday, retail sales, how the consumer is still holding up on all this. And then when we move over to Wednesday, this is where we're going to get initial jobless claims, and that's where we're going to find out from the Fed what they did. Well, I can tell you what they're going to do, but what their verbiage is that's coming out. And again, folks, we're going to focus in on this because world events are a major player in this, and that's why I continue to ask you guys, if you're looking to refinance or buy out there, you really have to keep a beat on this market, and that's where I can help you possibly do those things over there. So again, gold prices are up. We're just seeing right through here, and people have been moving into that trade for a long time. Here's where gold prices are. So that's rallying. And then let's look at our portfolio. So if you ever follow my channel, I do talk about stocks. We have a stock talk. Well, it was created as Stock Talk Tuesday, but Tuesday got a little volatile for me, so I just plug it in during the week when I can. I give you guys some leeway on that or some heads up because I post it as a live event. But what we're going through here is we bought a bond position because I never thought this world war was going to turn out. So we bought it into a bond position happened just, what was it, yesterday, and we're losing money there. You can see how the bond market, we are down, we're not down much, but with a one-day trade. But some of our other things have been doing pretty bad today as well. But you're going to see right through here, metals and energy, it's up because the prices of all these things are going up, 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 and away. So that is the basic report for today. Like I said, the news next week isn't really earth-shattering, but I do want to advise you guys of one thing. I want to show you a website that I need you to go to, and the reason being is I'm helping a young man right now refinance it. He's got a sky-high rate, and he said, Dan, I didn't see your videos lately that put in the opt-out pre-screener. So go, guys, I have something I need to ask you. If you're out there and you're looking to buy a car or a house or get a house refinance or something like that, please do yourself a favor. Go to opt-out pre-screener. Now, here's what this system does. What happens is when a bank or a lender pulls your credit for a house loan or a car loan, you're going to get that, your financial data is going to be sold from these credit agencies. If you want to stop that, I just got a text from the young man. He said, I got over 30 phone calls in the last 24 hours because I didn't do what you said, Dan. So I'm pleading for everybody out there, and I'll see if he can post something on this YouTube post to say, yep, I agree with Dan. You got to do these things. So go to optoutprescreen.com. You can set up, this is kind of like the do not call list. So when you go into it, you can sign up so your financial data isn't being sold. So that's my report for today, folks. I will be back over the weekend posting some updates on this, but I'll be back Monday with the opening bell to let you know how most of the week is going to come. But I will be posting over the weekend and give you updates on what's going on with all these rates and the whys behind it. So if you want to find out more about me and my team, I'll explain to you a little bit of what I do and how I do things. I'm actually a federally licensed mortgage loan officer. That means I work at a federal bank, and I'm licensed in all 50 states as well as Puerto Rico. Our slogan here, though, is one application, one credit pool. We're going to shop your loan over 30 different lenders. Now, how do we do that? Well, that's where I come into play, or this website comes into play. The lender, the bank that I work at, the federal bank, we're set up with 33 other lenders, making us basically a mortgage brokerage within a federally chartered bank. So how does all this work? Well, basically, when you put in your application here, I have the ability with one application and one credit pool to shop your rates and loan programs with my bank and 32 others to be able to offer you more competitive rates and more competitive programs. And that's how we do it. So to get involved with this, just go to therateupdate.com. You can give us a call right through here. You can ask me a question directly because a lot of people have questions. So just click here and ask me any questions that you want. But if you want to get the ball rolling, you could just click right through here if you want to look to purchase, refinance. And if you're also looking for those dips when they do occur, if you're looking to refinance at any point because you have your rates are in the high 7s, maybe low 8s, love to be able to help you track this. So we have a RateWatch tool right through here. What you're going to do is you'd sign up, just put in your information about your mortgage and what interest rate would you like to refinance. And as soon as that rate hits there, it could be next week or could be months from now, I'll be giving you a call so we can lock in that rate and get you started saving some money. So that's our report for today. That is our closing bell. But rates, they're at 6.89. They're up just a little bit today, but what this is going to do by Monday, don't know. I'll try to keep you posted. I'll be back here at the opening bell to show you what happens to these over the weekend. Thanks for watching, folks. God bless. Be safe out there, please. And if you could do me one thing just to help me out, please click the subscribe button down there. I'd love to be able to reach out to more and more people to help educate them on the economics of real estate and also wealth building. So thanks again. Have a fantastic weekend, folks. Happy Father's Day to any fathers out there. I got my kids coming by on Saturday to hang out and do a cookout. So I hope you enjoyed as well. So if you need some help from me, please just reach out or give us a call. God bless. Have a fantastic weekend, folks. See you soon. Bye-bye.